Hey guys, I started this finance fitness channel because I want to break down personal finance and make it easily understandable and accessible to everyone. Unless you studied finance, a lot of these important topics just don't get covered in school. Yet we all have to deal with money matters in our everyday life. So if this is something you're interested in, make sure you subscribe to the channel. I recently did a two-part series where I covered some of the reasons why I really like investing in real estate. And I gave my top 10 reasons in those videos. So if you're watching this video, you may also be interested in those videos. So I've included a link in the description for you. Real estate investing has been a personal favorite of mine for as long as I can remember. But there are always two sides to a coin, and there are definitely some downsides to investing in real estate. So let's take a closer look at that in this video. So here are my top 5 risks to look out for when you're investing in real estate. This is one that I find a lot of people overlook. Let's say you own some Tesla stock and you need to sell that investment because you need some cash. Well, for you to sell that Tesla stock, it's the click of a button and you can get the money pretty much instantaneously. But when it comes to real estate, that's not quite the case. Real estate is not a very liquid investment, meaning that you can't convert it into cash very quickly because it's a much more lengthy process. In order to sell your property, you need to find an agent. They need to advertise that property and maybe go show it to potential buyers. Then eventually you'll receive some offers, and even then there'll be some back and forth negotiating between the potential buyer and yourself as the seller. Then eventually you'll accept an offer, and that buyer may need to apply for a mortgage, and that again will draw out the process even more. And then when you have everything in place and you've agreed on a price and the buyer is qualified for a mortgage, you now have a couple of weeks to wait for the lawyers to go ahead and register the transfer of ownership from the seller to the buyer. And this whole process can take anything from 2 months to even 9 months, depending on your local market, how open you are to negotiating on your price, and also just the amount of interest there is in that property of yours. And during the whole period that you're the owner of that property, any money that you had to give as a down payment or deposit is tied up in that property and you cannot access it. Let's say, for example, you bought a property for $100,000 and you gave a 20% down payment or deposit. Well, that $20,000 is locked up in that property and you can't touch it. The only way you can access that money is if the property market increases and you potentially refinance that property, or you sell the property. So if you put all of your money into the down payment or deposit on a property, you could be putting yourself in a pretty difficult position because maybe something unexpected pops up, an expense that you have to cover, and you can't sell that property instantly to free up that cash. Never mind all the additional costs that you need to consider when buying and selling a property, like agent commissions and lawyers' fees, and that is what we're going to look at next. Buying a home has a lot of additional expenses. I'm not just talking about the purchase price, because we know that the numbers are big. Buying a property is one of the biggest investments that many of us will ever make. But aside from the actual purchase price, there's also a lot of costs involved with actually transferring the ownership to you. This varies from country to country, so be sure to carefully look at this in your market. But in most countries, you can expect to spend about 2 to 4% of the purchase price for transfer costs, especially if you're the buyer, in which case that'll go predominantly to the attorneys who's going to transfer that property into your name. And if you're selling a property through an agent, then one of the biggest expenses you'll have to cover will be the commission for that agency. But again, this does vary from country to country, because in some countries, both the buyer and the seller have to pay an agent commission. And then of course, there is taxes. Well, if you're selling a property and you made a gain on it, that gain will be taxed either at your income tax rate, or maybe if you've held it for long enough, potentially at the lower capital gains tax rate. And then some countries also impose an additional property tax when you transfer ownership. For example, in South Africa, where I'm from, if you're the buyer of a property over a certain value, there's an additional tax called transfer duty that you also have to pay. So some may think, okay, I'll just buy property for $200,000 and then after a while it'll be worth $210,000. So I've made a $10,000 profit, right? Well, not necessarily, because when you bought that property, you probably spent about $5,000 to transfer ownership to you, and when you sold it, probably another $6,000. So in total, you've incurred $11,000 just in legal fees and transfer costs. So actually, the only people that you made rich are the lawyers. The bottom line is that when you're buying a property, make sure you carefully consider all of these costs so you don't get any nasty surprises down the road. Okay, so now you're the owner and you've paid all of those costs and it's finally over. Well, not quite, because with property ownership also comes a whole bunch of additional costs. You've got property taxes, insurance, maybe some condominium fees, all of those fall on the shoulders of the owner. And then there is one indirect cost that you really need to make sure you factor in when doing your analysis and determining how much you should pay for that property. And many people forget about this one. And that is vacancy. Now, this isn't such an obvious one because there's not an actual cash outflow going out of your account, but instead it's the potential loss of rental income because you don't have a tenant and your property is empty. Look, at some point your property will probably be vacant. Maybe you had a tenant that just moved out and you're struggling to find somebody else to move into that property. And these periods can be really painful financially. You still have all of your normal expenses every month, your mortgage, your property taxes, your insurance, but you don't have any rental income coming in. And this can be a big hole that you have to fill every month. And another reason why it's so important to make sure you have enough cash reserves to keep you afloat during these difficult periods. Now, most property investors assume around a 5% vacancy rate, which means that they think the unit will be occupied about 95% of the time. And the last 9 years that I've been involved with real estate, I think that's a pretty fair assumption to use. The biggest risk for you is forgetting to hit the like and subscribe buttons. But luckily, I reminded you and warned you of that, so you can go ahead and do it now. Okay, so you get a phone call in the middle of the night. The water boiler has burst and the whole property is flooded. The tenant's been away on holiday and they come back to all of this water damage, and it's going to take thousands to repair. Yes, if you have insurance, they'll cover some of the damage, but you still have to spend a lot of money out of your own pocket. And maybe while you're doing all this repairs, the tenant doesn't want to stay there, and so they leave the property, bringing in that vacancy consideration we spoke about earlier. Or maybe you're in a situation like what I've experienced before, where you have a tenant moving out, but you're kind of struggling to find a new tenant to move in because the place just looks a bit run down. It just needs some attention. Maybe you need to repaint some walls or retile or lay some new carpets. Doing these repairs will of course make the property more marketable and improve your chances of getting a tenant and locking in a good rental income. So in this case, again, you'll have to pay up out of your own pocket. So owning a property really can come with a lot of unexpected costs, and it makes it all the more important to make sure that you keep enough cash reserves aside. Never underestimate the value of a good tenant. Somebody that's looking after your property nicely and paying on time really gives you a lot of peace of mind. But this is not always the case. I've had some crazy experiences with tenants, and I'm sure if you speak to other landlords, they can share horror stories with you as well. I mean, here's an example. One of my tenants had an argument with his neighbor, and in the middle of the night, someone mysteriously threw a brick through the window and shattered it. I'm not joking, this is a true story. They threw a brick through the window. I had another problem where one of my tenants started subletting the property, renting it out to other people and making a profit off it, even though it was expressly prohibited in our lease agreement. And the way I found out about it is when the condominium manager called us, saying there's at least 6 people living in the small 2-bedroom apartment, which was against the condominium rules. Luckily, we managed to get that tenant out of the property quite quickly and didn't incur any losses. And of course, I've had problems of tenants not paying their rent. Now, in most cases, I've been able to use a deposit to make up for the shortfall of the rental income that I lost. But this is not always the case. In fact, I had one experience where the deposit was not enough, and this was one of the most frustrating and infuriating tenant experiences I've ever had. So we had this guy come in and he wanted to sign the lease agreement, not by himself, but in the name of his company that was based abroad. Then after some time, the company stopped paying the rent. And when we started following up, he always had an excuse and a reason. He said things like, oh, I'm getting money this week and then I'll pay you immediately after that. Or I've got this client that's about to pay me, and as soon as they pay me, I'll pay you the rent with penalties. Then after some time, we realized that this guy was not going to be paying. And so we started the process of evicting him. He refused to leave and he still didn't want to pay any rent. And then all of a sudden one day he disappeared without a trace. He closed his company down and he was gone. We couldn't find him and we couldn't recover any of the money. This was a big loss, and I really learned some hard lessons in this case, like who has to sign the lease agreement and also trusting your gut, because I didn't have a good feeling about this guy from the beginning. So what can you do to avoid this? Well, here the prevention is much better than the cure. So if you can avoid this from happening in the first place, it will just be so much easier for you. So make sure you do good credit checks, have a good lease agreement in place, call the references of previous landlords and ask them if they had any problems with this tenant. Make sure they pay the deposit before they move into the property. And either you or your agent can also go do inspections while they're living in the property. Buying a home can be a very emotive investment. You fall in love with a property and you get so excited to buy it. But when your emotions solely drive your decision making, this can be a bit risky. And guys, this is real. I've had to catch myself so many times when getting ahead of myself and overexcited about a property, even though it wasn't such a great investment. Remember the importance of letting the numbers and the analysis guide your decision making on whether to go for that investment or not. Of course, get excited, savor the moment. This is a big milestone in your life, and your gut and intuition can really guide you in this process. But make sure that rationality prevails when it comes to deciding on which property you buy. Otherwise, you risk overpaying for that property. I know of many cases of people that bought a property and overpaid for it, and then the real estate market dropped. Let's say, for example, you buy a property for $220,000, even though it's actually only worth $200,000. But then the market drops by just 5% and your property is now worth $190,000. Let's say, for example, that when you bought that property for $220,000, you gave a $20,000 down payment and you had a $200,000 mortgage. Well, now after the market has dropped, your property is only worth $190,000 and you still have a $200,000 mortgage. So you actually have a negative net equity in that property of $10,000. So in the shorter term, the power of leverage can actually be a negative for you if you overpaid for property or the property market drops. Of course, if you're patient enough, eventually the prices will go back up. Property investment is not an overnight millionaire plan for those that are looking to buy and hold a property and then rent them out. So you need to be patient using this strategy. So there you have it, guys, the 5 risks to be on the lookout for when investing in property. What do you think are the biggest risks of investing in property? I'd love to know your thoughts, so let me know in the comments section. You can also follow me on Instagram, and here is my handle. And that's it for the video today, guys. I really hope you enjoyed it, and if you did, as always, make sure you hit the like and subscribe buttons. I'll see you next time.